Okay, so why did we filter this signal here? Why didn't we go short? Now, there are several different reasons, but let's make it easy. I'm going to go to bar replay. I'm actually going to just do it just before London Open. Right, so here we are. That's just before London Open. So what is this? This, my friend, is the low of the pre-market session, the Frankfurt Open. So Frankfurt opens 7 o'clock over here. I can easily mark these levels. That is something that I will always do. And if I don't do it, I eye them. I know that what's going on. But since the price was going down, this was not very important for me, but this one was. Because, as you can see, it is in some kind of a downtrend. Let me go to the 5-minute chart so we can move the chart quickly. So even if you look at the 5-minute chart, if I was looking at the 5-minute chart, this is my low, and that's my swing high. So I can, if I like, mark these levels. Because when will this trend change? When will I know? Well, simple thing is that when this lighter line, which is the 5 EMA, is above this, and all the 3 lines are correct, most probably you will have a trend up. But that's not enough. You need to look at swing highs as well. So once price goes above this swing high, we will have initial turnaround. Let's go forward. I know I'm going the long-winded way. So as you can see, by marking this level, which is the Frankfurt session. Now these levels are not important when the market is in a very strong move. That's the thing. So if the market is bombastic, if it breaks out at the open, it ignores all these levels. It has nothing to do with it. But why do you want to have these levels? What you want to have these levels is that when the market starts and then it starts reacting to these levels, you know that the strength of buyers and sellers is in balance at the moment. They are kind of fighting it within a tight range. So that's the most important thing that we learn from this. Now, if the price went straight through it, you know that the strength of sellers there, or sellers who had stop losses there and all that kind of, they didn't have any power. Instead, there's an imbalance in the market. Like, for example, over here, there was an imbalance in the market. The buyers were in power. They were in charge. The sellers kept selling it a little bit, but the buyers kept buying. And then they found an equilibrium for for half an hour or something, few candles, and then the buyers took charge again. And then some selling, and then some buying. And this black candle here, it's not a black or a bear candle just like that. No, this is selling, taking over. For this period of 5 minutes, sellers were in charge. They sold more than what was bought. So price was going down. And then it goes up. And then by the time it came to us, London Open did not really do anything. So let's go forward a bit. So you can see there, let's go to the 1-minute chart now. You can see that the Frankfurt Open level is being held. So suppose you're a different kind of seller and you sell over here, price goes down, it comes back to it. What you do is that you sell even more. That's what they do. Or it goes slightly above, they sell more because they are, filling their position and stuff like that. And the other trades, as you can see over here as well, it goes down, comes up, they start selling again, it comes down, comes up, they start selling again, it goes further down, goes up, comes down. Maybe those sellers at around here took their profits and they went long. And again, at that same level, it's doing that. So when you have this information behind you, you know that price is reacting to levels quite a lot. You know that there is weakness in the market. That's the most important thing in this. Let's go to the 5-minute chart so I can quickly take this forward. So now, the benefit of hindsight, but I was looking at those levels. It's my habit. I have my Frankfurt high and low. I've explained this in other videos. Frankfurt high and low, swing highs and low from 5 minutes. You don't necessarily have to go to the hourly chart, but sometimes it's good. but if you end up having too many lines, that's also useless, right? So anyway, we go forward. We can see it just can't clear those levels. Choppy, even it broke out, and guess what? These sellers, they sold more because it couldn't be sustained, and sellers won the fight there, but the buyers are fighting as well. So this is not the type of market that we want to trade in. And then it goes straight away down. So I can assume that these sellers, and then the same sellers or even more, or new sellers, were selling it, and maybe this was their target, right? So I have this wick, and usually what I will do, let's go to the 1 minute chart, is that if I see prices like so, you can see this candle just completely engulf the previous ones, I will consider this low and this kind of swing low as my support. I ignore the wicks. So in your chart, you will see a wick, because I saw your chart, right? I'm talking to Tom from Discord group. And we're very near that signal, the one that you took and we filtered. Over here, yes, that's the signal over here. And as you can see, it's probably very clear to you now. And it's not that I didn't have this box before. I had it on my chart, and I had a line here as well. So this whole area is my support zone. I can draw it like this. I just don't like to draw very tall kind of boxes like this, because sometimes it doesn't make sense. So what I do is that I put a line there, and then I will connect. So from here, I will start with this low, and then extend it forward. And then when it gets violated, I can then extend it further to that. Now that's one thing that happened. I know that the market is not really moving today. There was this impulse move, but as you can see, and if you look at your rules, you can still see, can you define this as a trend? No, you can't, because this is your lowest low. That's your lowest low of the day. That's your highest high of the day on this chart of what we see right now. So from that point of view, you know that within a trading range, when prices go to the trading range lows, most probably it's going to bounce. So that's another reason that kind of got in there. And then there are some minute things there as well. Let me mark them. So you have this low, and then it got retested here again. And this is what we call the micro double bottom. Now I don't have the 15-second charts, but if I did, you would see this as a proper, one of those, let me draw that. Where is it? I don't have it. Okay, let's check over here. Oh yeah, let's just do this. Sometimes the market goes like this, and then a small pullback, and then it comes back, retest the previous levels, and then it either goes into a trading range or it breaks out. That's on the micro level that would have happened, fractal nature of the market. So we call this as a micro double bottom. If you scroll back on the chart, in the chat, you would notice that Emma had pointed out is a micro double bottom. So when you have a micro double bottom together in a support zone on your current chart, you don't have to be on the H1 or stuff. On your current chart, the 1 minute chart, like right now on this 1 minute chart, you didn't need anything else. You didn't need H1 levels, day one levels, whatever. Why? Because you have your own levels on the 1 minute chart. Those are enough for you. So when the market comes down, pulls back up, and that's what it is. Now, had it broken down there, right? Had it gone further down like so, and then it retested it over here, now we would have a very good reason to go short, even if it was a little bit extended. I mean, you can call this for what the market is today, the way it has been, the range has been tight. For that, it is quite a climactic move. So that's why we can't really code this into algos. We can code them, but there won't be this objectivity. Sometimes it's not good. So anyway, for manual traders, hand traders like they call it, or click traders, everything is relative. So today, relative to today's range and the strength of the market, this was pretty impulsive or pretty climactic. But that's not a problem, because anytime if volatility hit the market, you would be very happy if you took this trade and it broke. but there are higher chances that it won't break because we know that the market is weak and it can't break the levels. And that's my main thing that I keep telling myself and I keep sharing with everyone, is that the difference between a trending market and a trading range is that the market has either found an equilibrium between buyers and sellers, or there is lack of buying and selling, and that is why one side cannot take over the other. You know, buyers are not stronger than the sellers, and the sellers are not stronger. They are getting stronger, or they are winning their attempts back and forth, because that will always happen, but within a tighter range. You see, like here the buyers are winning, then the sellers are winning, the buyers are winning, the sellers. But if you look at an individual candle, in this candle, buyers won, seller won, buyer won, seller won, buyer won, seller won, seller won, kind of equilibrium, buyers won, nothing much. At one point, buyers were winning, then sellers were winning. That's how it is. But when you look at this trend candle, the sellers are winning, clear cut. The sellers are winning, clear cut. The sellers are winning, clear cut. But will they win on the next candle? And this candle itself is an indication that now the selling strength is not as much as it was within the last 3 candles. And then there's another attempt of breaking this low. It breaks it, but cannot break this, and you have a very good reason to suspect this. So when I have a level like this and a level like this one, when I have a level like this one and a level like this one, I would consider this as something. So instead, what I'll do is that I will wait for the breakout. Let me correct this. I'll wait for this breakout here. Oh, that's the wrong tool. I mean, it was very exciting for me here to actually look at it, wait for it. Let's see if it pulls back, retest, or just creates another signal. I would go short, and that's what it was. But since you're in stage 1, if you took this, you have a DS1, and if you didn't have this DS1, if you didn't take this trade, then probably I wouldn't have made this video. And so this has allowed you to increase your knowledge, and this is what counts as experience. So I hope you like my answer.